Good morning. Let's look at this Sunset Medical statement of cash flow case that is next up in your D2L content. This is an interesting case, very real world, and it's more of a finance case maybe than accounting. Well, it was in a finance journal, but a lot of accounting tangents on this that we're going to look at, and I want you to look at in responding to the questions that are listed. There's 4 questions. One of them I've given you the answer for that we'll see, but you need to answer the other 3. This is about Sunset Medical, an orthopedic medical practice in Colorado. This Dr. Jones was attending a trade show, and this medical consulting firm, PMI, wanted to provide billing and administrative services. Well, as you read down through here, without me reading all of this to you here, let me just share that screen here as I go through it. You should be able to see that. What you see here, going down and reading some of the various issues. They were wanting to, at the same time of potentially letting someone else that's supposed to be an expert do their financials for them and manage the office. There were some other things going on here that they wanted to purchase a new x-ray machine, which is going to be quite expensive. It's a part of this. The physician's management contract you can read about in part 2. Some of the key parts on here, they're going to do the recruiting, the marketing, public relations, recruiting, hiring, supervision of the business office manager, providing unaudited financial statements. That should be a red flag. Unaudited financial statements, meaning whatever PMI says is in there, it's in there. That's not good. And to compensate PMI, they're going to pay them a monthly management fee equal to 4% of monthly net revenue, determined on the accrual basis. Now remember, PMI is under the cash base, Sunset Medical is under the cash basis. The financial statements that we're going to look at are cash basis, meaning no revenue is recognized until they receive the cash. Now, this is not a publicly traded company, so they can do whatever they want as far as cash basis or accrual basis, but you do need to have consistency. So the fact they're going to change, PMI is going to change Sunset Medical from cash basis to accrual should be a red flag as well, because there's 12 principles I talked about. What's one of them? The last one on there, consistency. It's not a gap principle, it's really more of a guideline that you need to be consistent in how you manage your books. But also this issue of not being audited. But they're going to pay the fee equal to 4% of net revenue, meaning if they're under the accrual basis of accounting, this is revenue that's been booked but hasn't been collected yet. And they agreed to pay a billing collection fee equal to 5% of the company's net receivables. Again, talking about the accrual basis of accounting. Mid-year performance, that information is given. I'd make it a little bit simpler, and what I'm going to show you is I do it the 2011 year-end performance for the whole year. And it gives you some information here that's in the financials, a little bit hard to follow it here. It says that the increased revenues from 1.1 million to 1.6 million. Wow, that's a huge increase. But remember, they've gone from cash basis to the accrual basis. It makes it look better than it really is. If you're going to go to the accrual basis, what should they have done? They should have gone back and restated their income statement and balance sheet for the prior year. If you want comparability, right, comparability and consistency, that's what they should have done, because that 1.167 million could very likely have been 1.6 or more. You don't know. But it's a one-time bump. And the red flag here is what? Their cash had fallen dramatically during the year. Well, that's because they booked revenue that's in accounts receivable, right? Revenue on the income statement. Balance sheet has accounts receivable. Accounts receivable you hope will be turned into cash, but you don't know that. At the same time here, if you're going to pay out their fee based on that, All right, then it says they've also had this borrow 200,000 a year, including 100,000 to purchase the X-ray machine. Exhibits 8, 9, 10 show the year ended December 31, 2011 income statement, balance sheet, and statement of cash flows. So you need to look at those three exhibits when you look at this Excel sheet that I had provided, because I've taken their numbers and made cash basis financial statements instead of having you do that. And then they ask some key questions here. Is Physicians Medical acting in the best interest of Sunset Medical? Did actual revenues jump by 400,000? Are they correct? I mean, a lot of good questions here. What's the ethical dilemmas? And so the questions here on page 1 through 4, or excuse me, here on page 4, questions 1, 2, 3, and 4, examine 2011 financial statements provided by PMI and the 2010 financial statements provided by Jackson Associates to answer the following questions. What's the differences there in these statements? Right, and then I'm going to show you 2011 restated for cash basis. Use that in your discussion as well. Of course, that's what you're doing here in part 3. Part 3, I've done that for you. Part 3 is completed for you. That's what the Excel sheet is. But you're comparing this. Why did these changes? What could have forced these changes? All other than what I've just told you. Of course, include what I've told you in your discussion in your paper. What's the ethical dilemma facing PMI in terms of preparing these statements? Right? Ethics, fraud, internal controls. Examine the contract and discuss how the contract language may be altered to reduce the ethical dilemma facing PMI. This is why this is not just an accounting case, it is a good MBA case. All this stuff fits together. How would you alter the contract language how can you alter the contract language to provide incentives for PMI to perform in a manner that is more in line with the desires of Sunset Medical? What do you think? Go back and restate 2010 based on, or excuse me, 2011 based on the cash basis, or go back and change 2010 and put it on the accrual basis. So you got comparability. What else would you do? And then finally here, question 4, since I gave you question 3, should PMI management and billing be retained for 2012 or should they seek to find someone else? What are the HR issues going on in this place? What does it say here about HR? PMI more control of the company, including power to terminate employees. Terminate the contracts of both the office manager and the billing secretary. Well, who else knows what's going on in this company than those two individuals? And PMI hired who? Mr. Wilson's son-in-law. All kinds of good stuff in here you can talk about in 1,500 words. All right, so that's the cash basis when Sunset Medical was doing it themselves. All right, looks like some slight increases in revenue, and this is what? This is cash basis. So this is what you know is real, what the IRS likes, cash basis. Net income, not so good, right? Lost 14,000, made 13, lost 5,200. You can see why they're willing to offer up this to an outside consultant who they think they're going to outsource and save money. There's the balance sheet. Obviously, the cash balance is not much. Look how they treat accounts receivable on here. That's kind of unusual, but they show accounts receivable. And then also, I guess based on the contracts that they've got, even though they've not booked the revenue, they're showing the accounts receivable. Of course, then they're showing it 0 because there are no entries for debit to accounts receivable and a credit to revenue. That's not shown until it's a debit to cash. But they do know they have outstanding invoices for work. And so that's why they're showing it 0, except for the 25,000 that's one of the officer owes. All right, so that's their balance sheet. There's some of the Exhibit 3 authority and responsibility of medical management, PMI, what they're going to be doing. Use that in your discussion of what you think they shouldn't be doing. And it's not always wrong to outsource, but be careful what you outsource. Are you outsourcing just the menial work that somebody needs to do at some point? Or are you outsourcing the whole shebang, right? What about the compensation? What should that be based on? Revenue that's accrued and receivables that might be inflated, or should it be based on cash or something else, or by transaction? All right, there's 6 month statements. 6 month statements aren't really that important. I'm not sure why they put those in there. To me, it's too much information. But the year end, December 31, 2011, they're showing net income of $231,170. Wow. And they were struggling just to break even, weren't they? Let me share what I developed, which you can print out as well. What I did is restate 2008, 2009, 2010. This is the cash basis. And then I put 2011 on here. Net of bad debt. And so this is what it would have been had PMI stayed on the cash basis. Well, they did worse than they did the prior 3 years. Look at that down here at the bottom. Wow. Income statement. Then what's the balance sheet look like? And again, this is what I put together. This was part 3 or question 3. Look at the cash, accounts receivable. So then I took the accounts receivable and did just what they did in the prior years, show what is you have out there as far as invoices with no cash. And then the cash flow statement, which was sort of clunky to put that together, but again, it's showing the ending cash balance has to be the same. The cash balance is cash balance on your balance sheet. There's no accrual or anything on that. All right, so use that in your discussion as well. Going back to, because what you're doing, you're comparing what? Net income there of $68,689 on the cash basis. And $231,000 down here at the bottom under the accrual basis. It's a one-time bump. There's the balance sheet showing that accounts receivable. A lot of accounts receivable out there. See, that's your difference. That's the accrual, right? You wouldn't have had that under the cash basis. But compare pages 11 and 12, especially with what I've got in that Excel sheet that I just showed you. And cash flow is what it is. All right, so again, going back up here to the question page. Read this case, really interesting. Answer those 4 questions. And again, I've already done number 3. That's what the Excel sheets are. All right. Good luck again. Email me if you have questions. But good luck, and we'll talk again soon.